Welcome to today's What Moved the Market show. I'm your host Prem. It's Tuesday, January 6th, 2026, and here is everything you need to know as the markets close for today. The Indian stock market wrapped up with mixed sentiment as profit-taking activity dominated intraday trading. The Nifty 50 closed at 26,178, down 71 points or 0.27%, while the Sensex retreated to 85,063, shedding 376 points or 0.44%. Bank Nifty too felt the pressure, sliding to 60,044, down 106 points on the day. The overall tone was cautious as investors turned defensive on global cues, particularly following geopolitical tensions emanating from Venezuela, where U.S. forces captured President Nicolas Maduro over the weekend, sparking safe haven demand across precious metals globally. The rupee weakened marginally to 90.13 against the US dollar, reflecting broader external volatility and demand for hard currency assets. From a market perspective, it was very much a tale of heavyweight stocks pulling the index lower, while select pockets of strength held firm beneath the surface. Now let's pivot to the movers that truly shaped today's trading action. On the bullish side, Apollo Hospitals absolutely led the charge, jumping 3.74% to close at 7,348 on strong operational momentum and earnings visibility. ICICI Bank delivered impressive gains as well, climbing 2.8% despite broader banking sector headwinds, while Bajaj Auto rocketed 2.49% higher to 9,734, benefiting from auto sector optimism. Havells too jumped 3.47%. On the flip side, Trent was absolutely hammered, plummeting 8.63% in its worst session in nearly 6 years, shedding 382 rupees to close at 4,047. This sharp decline reflected demand concerns in the discretionary segment amid softer consumer sentiment. But the real story of the day was Reliance Industries, which became the single biggest drag on the Nifty, falling a sharp 4.5% to close around 1,506 rupees after hitting an all-time high just yesterday. The catalyst here was a Bloomberg report claiming that 3 vessels laden with Russian crude were heading to the company's Jamnagar refinery. Reliance issued a categorical denial, stating that its Jamnagar refinery has not received any Russian oil cargo in the past 3 weeks and is not expecting any deliveries in January. The company expressed deep disappointment that its denial was ignored before the report was published. This sparked heavy profit-taking, given that the stock had enjoyed a robust rally over recent sessions, and combined with broader market weakness, it triggered a cascade of selling that wiped out well over 1 lakh crore from the company's market capitalization. HDFC Bank also played spoiler, declining 2.17% to 977.5 rupees as foreign investors continued their profit booking following the bank's Q3 business update. While the numbers themselves were not problematic with solid deposit and loan growth, FII selling pressure dominated, dragging the stock below its 200-day moving average for the first time in nearly 10 months. This was a significant technical breakdown that concerned investors. ITC and Kotak Mahindra Bank were also among the losers, both facing selling pressure. From a technical perspective, Nifty 50 tested, but held above its 9 EMA support, around 26,100 to 120, which marked the 50% Fibonacci retracement level. The immediate support zone sits at 26,050 points, with stronger backing expected around 26,000. On the upside, resistance emerged at 26,300 to 350, with the next target hovering around 26,500 if the bulls regain traction. Bank Nifty similarly maintained footing above the 26,000 level intraday, but needs a decisive breakout above 60,500 to reclaim bullish momentum, with resistances firmly planted at 60,500 to 61,000. The broader market was decidedly mixed, with Nifty Mid-Cap 100 and Small Cap 100 showing relative resilience, down only marginally, suggesting that selling was concentrated in large-cap heavyweights. Turning to sectors, IT stocks paradoxically held firm, with IT index gaining around 0.5 to 1% despite broader market weakness. Pharma and PSU banks also supported the market with gains in this range. Metals surged more than 1% as base metal prices firmed on global demand hopes. However, oil and gas stocks cracked sharply, with the energy index down 1.6%, weighed by Reliance's sharp decline. Media too struggled, and infrastructure saw some selling. Auto surprisingly held ground despite Trent's collapse, suggesting selective demand. On the regulatory and macro front, a significant development came from the NSE, which commenced the January 2026 F&O series with structural changes aimed at retail trader accessibility. The Nifty lot size has been reduced to 65 contracts from the earlier 75, while Bank Nifty lot size has been lowered to 30 contracts from 35. These changes ensure smaller notional exposure per contract and lower margin requirements, though traders must recalibrate their position sizing strategies accordingly. Additionally, 4 new stocks, Swiggy, Bajaj Holdings, Waaree Energies and Premier Energies have entered the F&O segment starting this series, while several others have exited based on SEBI's revised eligibility criteria. These changes underscore the regulator's focus on managing retail participation in derivatives, especially after concerns around high loss ratios and speculative intraday activity. On the commodity front, safe haven buying dominated price action following the geopolitical shock from Venezuela. Brent crude edged up to $61.85 per barrel, gaining 0.15% as markets factored in a modest geopolitical risk premium, despite Venezuela's already severely diminished oil output falling below 1 million barrels per day. MCX gold surged sharply, closing at 1,38,633 rupees per 10 grams, up 513 rupees or 0.37%. Silver too rallied forcefully on the back of safe haven demand, jumping 1.81% to close at 2,50,599 rupees per kilogram, up 4,444 rupees. This powerful rally in both precious metals reflects investor hedging against geopolitical uncertainty and currency weakness. Turning to the geopolitical backdrop that rattled markets, the capture of Venezuelan President Nicolas Maduro by U.S. military forces over the weekend injected fresh uncertainty into global markets. While crude supply risks remained relatively muted given Venezuela's collapsed production, the broader narrative is one of escalating U.S.-Latin America tensions, with reports of threats toward Colombia, Cuba, and Mexico over drug trafficking concerns. This geopolitical risk premium has lifted gold prices globally to near record levels and pushed silver up sharply. Notably, both China and Russia condemned the operation swiftly, adding to international tensions. For Indian markets, this manifested as flight to safety demand into precious metals and a cautious stance on riskier equities, particularly energy stocks. Looking ahead to tomorrow's session, the technical setup suggests a consolidation bias in Nifty 50 around the 26,000 mark. If the index holds above 26,100 support, expect a recovery attempt toward 26,350, with a potential breakout toward 26,500 if broader sentiment improves. However, if selling resumes and the index decisively breaks below 26,000, traders should expect a sharp pullback toward 25,900, where the next layer of support awaits. For Bank Nifty, the picture is similar with strong support at 59,500 to 59,700. A sustained move above 60,500 would confirm upside momentum, but any weakness back toward 59,000 could accelerate into 59,000. Key catalysts to watch include further developments on the geopolitical front from Venezuela, any updates on FII flows, and corporate commentary on earnings visibility for the months ahead. Global cues from markets reopening will also matter, particularly commentary on energy and currency markets. Here is your actionable takeaway for tomorrow's session. Reliance Industries broke below critical moving averages today and wiped out significant value, making it a stock to watch closely. If the stock finds support around 1,500 rupees tomorrow and shows signs of stabilization, a contrarian bounce toward 1,560 and 1,580 rupees would be attractive for scalpers. However, if selling persists and the stock cracks below 1,490 rupees, expect further downside toward 1,470. Similarly, HDFC Bank's breakdown below its 200-day moving average is significant and warrants staying on the sidelines until a clear reversal pattern emerges on the daily chart. On the positive side, watch for Apollo Hospitals and ICICI Bank to potentially lead the next rally, as these stocks are showing the requisite bullish structure. So there you have it, a complete wrap of today's market action. For more insights and detailed analysis, don't forget to tune into tomorrow morning's market opening bell update at 9:15 a.m. as we set the stage for the next trading session. Send in your questions, trading charts and market observations to our inbox, and we'll dive into them on the show. Until then, stay sharp, trade safely, and keep your risk management tight. This is Prem signing off from What Moved the Market. We'll be back tomorrow with fresh views and actionable insights to navigate India's dynamic equity landscape. Thanks for tuning in.